All right, welcome guys. Welcome to video 8. Now, this is the beginning of week 3, and in week 3 we're going to dive into Japanese candlesticks. And I'm going to go over the basics of Japanese candlesticks, and then I'm going to show you how I use Japanese candlesticks, which is definitely a lot different than what you're going to get taught in traditional price action courses or on the videos, on YouTube or things like that. It's definitely different than the way most people use them, and I think that you're really going to like them because I use Japanese candlesticks as a tool, okay, not as an indicator as most people use them. Now, I have dropped in the bonuses folder all of the Steve Neeson books. So if you really want to do a deep dive on how Japanese candlesticks are traditionally used and all of that, I've put those resources at your disposal. You're more than welcome to look into that, that facet of Forex. I know I've gone through those courses, and I learned Japanese candlesticks the traditional way just like everyone else, but I found along the way that there's actually a bigger story that they're telling us, and if we can look at the overall story, we'll get a better idea of what the market is going to do in the future, and that's how I want you to approach using candlesticks in this course and going forward. Okay, and we'll talk about that as we go along. But in this module here, we're just going to go over, I want us to be on the same page as far as what candlesticks we need to look at, what we need to look for, and then we'll talk about how we're going to use them in our actual trading and our price action analysis. All right, because candlesticks are really going to be a great tool for us to use to look for our entries, and that's what most people struggle with. They struggle with, where do I actually get into the market? Now, candlesticks can be a great, like I said, a tool for helping us find those places in the market, but they're not some type of prognostication, be-all, end-all, crystal ball telling us that, oh, okay, the market's reversing now, type of a deal. So get that out of your mind right away. You're not just going to be able to see a candlestick pattern and then just catch a trend reversal, at the lowest peak or, the lowest valley or the highest peak. It doesn't work that way. If it was that easy, we'd be able to just, every candlestick reversal pattern that formed, we'd all be able to jump in at that point and it would work 100% of the time, but it doesn't work 100% of the time. And I think you know that. If you don't, then just try it for a week and you'll realize very quickly that it's not what it's been cracked up to be over the past, couple decades. So let's talk about what were candles used for in the beginning. And I go over a little bit of this in the Candlestick Basics video in the free price action course on YouTube. If you haven't watched that, pause the video now. I think it's only like a 15 or 20 minute video. Go watch that Candlestick Basics video, and it just covers the very basic origins of what candlesticks are and how they're used, how they were developed. But in a nutshell, candlesticks were developed by a rice trader back before there were computers, back before there was the internet, back before there was any of that. So keep that in mind, that he didn't have 5-minute charts. He didn't have 1-hour charts. He didn't even have 4-hour charts. The candles were used for him to measure daily production, daily sales. Okay, all he had was a daily chart. So he had his opening of the day, his closing of the day, and then whatever the highest or the lowest prices that rice was fetching during the day, during daily trade. Okay, so we take that into our analysis now. We kind of use that same mentality, but it's been broken down so much that we have candlesticks now for the 1-minute chart, which is giving us just information overload. Right? So what are candles in their very essence? Well, candles represent the battle ongoing, whether it be on 5-minute all the way up to the weekly charts, between buyers and sellers. Okay, they're showing us who's winning at any given time and who has the momentum at any given time. And that's really what we're interested in. We need to know who's in control, who has momentum behind them. And then it is also going to show us when are they taking a quick breather, when are they pausing, or when are they losing ground. Okay, so all of those will be covered in our subsequent videos. But first thing we need to know is, what is it telling us just on face value? So if we look here, we have our these are two Maribozu candles, it would be the technical name. And I'm not going to be really big on the technical names, okay, because that's not what's important. What's important is what is the story that it's telling us. So right here, each one of these candles is telling us that there's a one-sided victory happening. On the left, the buyers won decisively. It wasn't even close. The sellers took no ground from them whatsoever because we see no wicks on the top or the bottom. So that's a completely one-sided victory. And then of course on the right, a one-sided victory for the sellers. No ambiguity to that whatsoever. We know without a doubt that one side won that battle, clear cut. All right. Next, we have what we would call a spinning top. Okay. We have long wicks on the top and the bottom of about the same length. Now, again, the body color doesn't really matter because, again, in this instance, what we're seeing is indecision. We're seeing an advantage go to one side, but overall, massive indecision in the market. So on the left, we see that there was indecision, advantage buyers. The buyers did gain a little bit of ground by indicated by the body, and on the right side, we see that the sellers took the advantage. Still, indecision in the market. There's really not going one way or the other, except you just give it a slight advantage to either the buyers or sellers, depending on obviously the color of the body. Okay. Next, we see that this would be like an engulfing candle. We have wicks on the top and the bottom. It wasn't a completely one-sided victory, but what we're looking for is who's in control, who has the momentum in the market. So in this example, let's just take the buyers as an example, that for this, the buyers are in full control of the market right now. They're barely being challenged at all by the sellers, and so we see a full-bodied candle. Buyers have full control. Now, our next example, we see that buyers are starting to lose control. They're losing control of the market. They're losing their momentum because they were able to push price up very high, but it got pushed back down about 50% by the sellers at the very last moment, and it closed about midway up. So we still have buyers in control, but they're losing control. That control is fading. Okay, that's the story that we're seeing right now unfold before our eyes. Now we see further loss of control by the buyers. In the beginning, they had full control. Now they're losing control, and then with this third candle, they have very much lost control of the market. Momentum is shifted. Buyers they pushed price very high up, but the sellers came in and just squashed it. Okay, that's what we see represented by that very long wick, is that sellers are pushing the price very, very far down. They haven't taken control of the market, but the buyers haven't given it up either. We still see the buyers are in slight control, but now we want to start to look for reversals happening and our reversal formations forming, or these candles pressing up against either our support, resistance, or trend lines. Right? And then finally we see complete loss of control in the market, or otherwise known as exhaustion. Okay, the buyers are exhausted. They don't have anything left in them. They made one last gasp to try and push price back up, and it got completely rejected by the sellers. And here we see a standard doji. This is what would be known as a gravestone doji. Okay, and again, we don't need to get into all the technical terms. It's not really important. What's important is that you're seeing what's happening in the market with the correct vision, and that is that the momentum is shifting from the buyer's control over to the seller's control, and now we want to start looking for selling opportunities depending on where these candles happen in the market. That's also going to be critical. We don't just want to look for any doji or any spinning top to happen. It needs to happen at a level of reaction. It needs to happen at a support level, a resistance level, or a rejection or retest of a trend line. Okay, so this is us taking our trend meets structure to the next level. And now we're going candle by candle to analyze where is price reversing. Is it at the level that we want it to? And if so, now we need to start looking for our entry opportunities. Now, some of the most important candles that we're going to look for are going to be our engulfing candles. Okay, engulfing candle is going to be a very, very clear indication that momentum has shifted. An engulfing candle is any candle that is greater, has a larger body than the previous candle. Okay, it can be by a little, it can be by a lot, but it has to be larger than the previous candle for it to qualify. It has to basically engulf the previous candle, hence the name. Okay, so that's going to be one of our key candles to look for is an engulfing. And then the next couple candles are going to depend on where they happen in the chart. So we have two sets of candles, both extremely similar. What's going to separate them, and I go over this in the basics video, is where do they happen in relation to support and resistance, or on a also as far as where do they happen along a trend line or inside of a channel. So the first two that are coming up against resistance because they're underneath our S&R line are going to be our shooting star and our hanging man. And again, it doesn't matter if you memorize these names, not big deal. I'm going to have you go through and label a couple charts though, so you're going to end up memorizing them whether you like it or not. But we need to know what they are and what they represent. So if they're coming up against resistance, it's going to be either a shooting star or a hanging man, depending on whether the longer wick is on the top or the bottom of the body, as we see here. Okay, and then for the same candlesticks that are up against support, those are going to be our inverted hammer and our hammer. Okay, so both very important, both telling their own story in the market, but depending on whether they're coming up against support or resistance, that's going to determine whether it's, for instance, a shooting star or an inverted hammer. Okay, does that make sense to everyone? So we've got those formations, and then the final two that we want to keep an eye out for, we want to look for our spinning tops, because those are going to tell us that we have indecision and could be the signal of a possible trend reversal, and then our dojis. And our dojis again are just going to indicate that we have exhaustion in the market and could be a good indication that the next follow-up candles are going to point towards our possible entries into the market. And I'm going to go over this on a live chart to show you what I mean in just a second. For now, just remember that these are the important candles that we want to look for when we start to look for our entries at trend and structure. And then our important reversal patterns, I know there's a ton of them. If you want to learn them all, that's fine. The ones that I look for the most are going to be our evening star. That's a seller's reversal pattern. So we want to start looking for a sell, or your morning star formation, and that's going to be an indication that trend is reversing into buyer's territory now. Okay, and of course the easiest way for you to remember is an evening star sets, so the pattern will reverse to head down. And in the morning, the sun rises, so that formation turns going from selling to buying. Just an easy way for me to remember it, and thought I'd throw that in. Figured it might help you remember them as well. All right, so let's take a look at the charts, and we will go through going by each candle by candle and how we can recognize these formations, and then I will have you go to the charts and label me out a bunch of candles so that I can see that you grasp this concept as well. So let's take it to the charts real quick. All right, let's take a look at Australian dollar, New Zealand dollar. Let's take a look at the chart and see if we can't. All right, let's take a look at the charts. Here we have Australian dollar, New Zealand dollar. And what we're going to do is we're just going to use just candlesticks and basic market structure to see if we can't spot some entries to take a trade based on possible market exhaustion or reversal. So if we look at market structure here, we can see we're kind of in a short-term uptrend, because here we have our lower low formed by this morning star formation starting this kind of short-term uptrend. We have our market structure, we have higher highs and higher lows starting to form. And I say short-term because if we use the full amount of data that we have here, price has not breached this point yet. So technically we're still in kind of an overall downtrend, but we'll talk more about what I refer to as the macro versus the micro, and how we can kind of filter through all of that data to determine what data we want to actually use to take our trades, whether we want to look for an uptrend, a downtrend, and so on and so forth. But for right now, we're just going to use just basic candlestick analysis. So what we have here, we've got our short-term uptrend, nice, very large bullish candle. So let's go candle by candle and see what we can see. All right, so first thing is we see a little bit of market exhaustion happening here. We see that price did go up, but then it got pushed right back down and ended up closing as a bearish candle. So we want to keep an eye on this. We don't have enough information yet to make a decision about a trade. We're not just going to jump right in at every shooting star, because this would be a shooting star as we're coming up against resistance, this resistance level here. So we need a little more information. But what it's telling us right now is that buyers are starting to lose their momentum, and at least for the time being, the sellers have kind of taken partial control of the market. So we go to our next candle. All right, we're seeing indecision in the market, but we still haven't breached this lowest point yet. Okay, price has to go below and has to close below this candle here, what we want to think of as our controlling candle, before we can even think of entering a trend reversal trade. And in this case, it would be a short trade. So until price closes below this candle is still in control. Buyers still have overall control of the market. So let's keep moving forward. Okay, there we go. Now we have a breach of that level. We have price closing below this candle. Now we want to look for a sell trade or an overall short trade. So this becomes our bearish engulfing. We want to enter a short trade. Now let's see how the market plays out. More indecision in the market, not indecision, but we have more exhaustion from the buyers trying to push price back up to where it was but then it got pushed right back down by the sellers, so we're still in this short trade. Yep, more selling, more selling. Now we have our spinning top, which is indecision in the market, you know, and we have to decide, is it true indecision, or is it just the sellers taking a break? Is it the market taking a little bit of a rest? So until we see price break above what is now our controlling candle, we want to wait and see how that plays out. And we get more sellers coming into the market, more, and price continues to drop. Now we get a little more of indecision. We have a spinning top here. It was followed up by another bearish candle. We've got another spinning top here. Now we want to wait, and now let's see, do we get bullish candle coming in, or do we get more selling pressure? Okay. Now we're starting to get a little bit of bullish pressure. We've got buyers coming back in. Are they ready to take over control of the market, or are the sellers going to keep pushing that down? We won't know until we see price whether or not it breaks above our controlling candle. It has to close above this level for us to even consider getting into a long trade, which it does. Now we have a break above. We had price push very high up. Now, even though it did get pushed back down by the sellers, you know, showing us that we still do have sellers in the market, this big push up is telling us that the buyers have come back into the market, and they've come back in a major way. So we want to exit our short trade. Now we want to look for a reversal off of this formation, another morning star formation. Now that we have a close above this controlling candle, now we want to look to enter a long trade. So now we take price up. That's weird. So we have price go up, little bit of a pullback, little indecision. Yeah, we still don't have price closing below this new controlling candle here. So we're still in our long trade. So we keep going. We got price right to that level, right there, but it never closed below, and so we don't close out of our trade. This would be price basically returning back to break even, but we want to stay in that trade, and price then does continue to go back up. Okay, so this long trade is playing out. But look at that. Now we get a new candle coming in. We get this engulfing bearish candle, and this is a break below this level. Right? So we want to exit this long position and now look for possible short trades just based on this big engulfing candle that had basically no resistance whatsoever from the buyers. The buyers came in just a little bit and just got crushed by the sellers. So this is telling us possibly that sellers are back in the market. We need to see how this plays out. Okay. So we did have sellers come back in the market. We've already exited our long position, but now we want to see, is this trend going to continue? Is price going to keep going up? Right now we have two very large bearish candles, but now we have this, well, since it's right up against support, we've got this very long wick. You could say possibly a spinning top. I'm going to say that's more of an inverted hammer there. And now we need to see what price is going to do. It still hasn't broken back above this level. This is our new controlling candle, and price needs to break above that level before we want to look to get into a trade. It does not break that level. it closes maybe 1 pip above, that's not going to be enough for us. And then look at that, price comes right back in and crushes back downward. Okay, so we're just going candle by candle and looking at what is the story that price is telling us. Are buyers in the market or are sellers in the market? And each candle is going to give us another piece to that puzzle that'll then give us an overall picture as to whether or not we want to get in a trade, get out of a trade, or stay in a trade, depending on what our positions are at that time. So for your homework, I want you to just go through and take like a screenshot, just a static picture of price with the candles kind of semi-enlarged and spread out to give you room to work. And this one you're really going to have to do in TradingView. So it's good, if you're not fluent in TradingView, now's a good time to to practice, because it's good to know both MT4 and TradingView. So what you're going to want to do is use the call out button here. Okay, it's in your text submenu, and you're going to want to label. I want you to label each candle that's telling us a very relevant piece of the puzzle. Like this one here, you would say Morningstar formation. Okay, and then let me turn this on. And then this one here, you have shooting star. Okay, this one engulfing or bullish engulfing, right? And then just depending on where it is at support or resistance. Again, here's another shooting star. This one here could be spinning top, or the entire formation could be Morningstar. Okay, just like that. I want you to go through and label each and every one, and you don't have to worry about labeling controlling candles or anything like that, but I just want you to demonstrate just a basic proficiency of being able to know the difference between hammers, inverted hammers, hanging man, shooting star, morning star formation, evening star formation, and engulfing candles. Okay, and I want you to go through and try and label as many of these as possible, and you only have to do two charts. Return them into me like that, and then in our next video we're going to take this standard candlestick pattern analysis, and we're going to kind of turn it on its head. I'm going to show you a different way of looking at these candles that give you an even better story. We're going to look at the micro versus the macro version, and then we're going to talk about how we're going to use our level up strategy to look for who is the major player in the market. Is it a buyer? Is it a seller? And how can we use that overall trend to look for our trading opportunities? All right, so go ahead and actually I'm going to change that right now so that there's no confusion. Go ahead and just send me two charts is fine, and then send them to me on Telegram, and once you're done with that, then we'll go on to the next video. And then after that, we'll talk about how do we apply this on our support and resistance levels, as well as in a range, if we have price kind of ping-ponging in between support and resistance. And then our final video will talk about how do we use these in our channels and with our trend lines, which will be crucial for us taking our trend meets structure trades. All right, guys, I hope you enjoyed this just quick breakdown of Japanese candlesticks. This was just a very, very straightforward basic video because I just want you to have the basic concepts down. And then in our next video, like I said, we'll talk about a whole new way of looking at candlesticks that I guarantee you probably have not seen before. All right, guys, Thanks for joining me with this in this video module, and I will see you in the next one.